Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Tencent Holdings Limited interim report. Tencent Holdings Limited market capitalization of 5,410 billion is significantly larger than the average industry peer of roughly 254 billion. This shows that Tencent Holdings Limited holds a significant advantage in their industry. Tencent Holdings Limited trades at a higher price-to-earnings ratio of 24 times and a higher price-to-book ratio of 4 times relative within the industry. Despite the industry trading at relatively low valuations, the stock commands a premium over its peers. Unless supported by a strong economic moat, the company might not appear to be the most attractive opportunity in the sector and is likely fairly valued at best. The company maintains a moderate leverage profile, with liabilities making up 41% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. Tencent Holdings Limited offers a diverse range of businesses and services across various sectors. The company provides value-added services, marketing solutions, fintech, and business services to consumers and enterprises globally. For consumers, Tencent offers communications and social services such as instant messaging and social networks, digital content including online games, videos, live streaming, news, music, and literature, and fintech services like mobile payment, wealth management, loans, and securities trading. The company also provides various tools for network security management, browsing, navigation, application management, email, and more. In the enterprise sector, Tencent offers marketing solutions with digital tools such as user insight, creative management, placement strategy, and digital assets management. The company's cloud services include cloud computing, big data analytics, artificial intelligence, Internet of Things, and security technologies for various industries like financial services, education, healthcare, retail, industry, transport, energy, and radio and television. Tencent also invests in, produces, and distributes films and television programs, offers copyrights licensing and merchandise sales, provides internet advertisement services, and offers software development, information technology, and system integration services. Additionally, the company develops and operates mobile games and engages in innovation businesses such as artificial intelligence, robotics, quantum computing, and next-generation technologies for food production, energy creation, and water management applications. Tencent's stock price has experienced a significant increase of over 43.93% in the past year, driven by a combination of strong financial results, strategic advancements in artificial intelligence, AI, positive market sentiment, and robust performance in its core gaming and advertising segments. One key factor contributing to this growth is Tencent's consistent strong financial performance in 2025. The company reported double-digit revenue and non-IFRS operating profit growth throughout the year, with notable increases in domestic games revenue and international games revenue. This positive trend continued into the third quarter of 2025, with revenue up 15% year-on-year and non-IFRS net profit increasing by 19%. Tencent's extensive AI integration and innovation have also played a pivotal role in its growth. The company has leveraged new AI tools to boost the popularity and revenue growth of both its domestic and international games, while also enhancing ad creation, placement, recommendation, and analysis through expanded AI capabilities. Additionally, Tencent Cloud successfully applied AI large models to over 100 business scenarios in the financial industry through collaborations with major financial institutions. The robust gaming segment performance has been another significant contributor to Tencent's growth. The company unveiled updates on 46 titles at its annual Spark 2025 conference, including popular games like Honor of Kings and Delta Force Mobile. Growth was observed in domestic games such as Honor of Kings and international titles, including Brawl Stars and PUBG Mobile. Market confidence in Tencent grew significantly throughout the year, with analysts attributing the stock's positive performance to the company's strong business growth and its ability to navigate regulatory environments successfully. Several financial firms issued positive ratings, including Zacks Research upgrading Tencent to a strong buy and Erste Group Bank upgrading it to a buy. Finally, Tencent actively repurchased its shares, signaling confidence in its valuation and contributing to shareholder value. The company's share repurchase programs have been ongoing throughout the year, with notable purchases in Kone and Qtwo 2025. Overall, Tencent's stock price has increased significantly due to a combination of strong financial results, strategic advancements in AI, positive market sentiment, robust gaming segment performance, analyst upgrades, and active share repurchases. The primary drivers of revenue growth for a company can be attributed to several key factors. On the one hand, investment in and utilization of artificial intelligence, AI, has been a significant contributor to revenue growth. The performance of evergreen games such as Honor of Kings and Peacekeeper Elite has also played a crucial role. Additionally, the breakout of new games like Delta Force has brought in fresh revenue streams. The company's marketing services have also seen rapid growth due to an upgraded advertising foundation model. Enhanced content updates, reward systems, and community events for Clash Royale have further contributed to revenue growth. The expansion of AI capabilities in advertisement creation and placement has also been a significant driver. Furthermore, improved consumption activity, leading to positive commercial payment volume growth, has had a positive impact on revenue. In terms of specific segments, the VAS segment has seen growth from games such as Delta Force, Honor of Kings, Valorant, Peacekeeper Elite, Supercell's games, PUBG Mobile, and Dune: Awakening. The FinTech and Business Services segment has also seen growth from consumer loan services, commercial payment activities, wealth management services, AI-related services, and e-commerce technology service fees. On the other hand, revenue decline can be attributed to several factors. A decrease in mobile device MAU of QQ by 7% has contributed to a decline in revenue. The domestic games revenues have also seen a seasonal decline following the Spring Festival period. Additionally, the Others segment revenue has decreased by RMB-0.182 million, -9.3% decline. The net income of the company experienced a significant increase of 16% from RMB 109,786 million to RMB 127,458 million. This growth was observed in both Kone 2025 and for the entire year 2025 compared to the previous year. The quarterly results also showed an improvement, with net income rising by 26% in Kone 2025. On the other hand, profit margins underwent some changes. The gross profit margin increased by 4%, reaching 57%. This growth was seen across various segments such as VAS, marketing services, and FinTech and business services. However, a contrasting trend was observed, with operating profit margins decreasing from 38% in 2024 to 33% in 2025. Despite this decline, the quarterly results showed an improvement, with operating margin rising by 2% in Kone 2025 compared to the same period last year. The company's financial performance is a testament to its ability to generate significant operating cash flow. According to the provided data, the net cash generated from operating activities stands at RMB 74.4 billion, indicating a substantial inflow of funds into the business. Furthermore, the cash generated from operations is reported to be RMB 180,271 million in 2025, underscoring the company's capacity to produce substantial cash flow from its core operations. This positive trend is reinforced by the operating cash flow figure, which shows a significant surplus of RMB 48,747 million. These numbers collectively demonstrate that the company is indeed generating positive operating cash flow, a crucial indicator of financial health and stability. The company's debt level and interest expenses have undergone significant changes in recent years. In terms of debt level, the total debts increased from RMB 338,615 million in 2024 to RMB 393,815 million in 2025, indicating a rise in debt. However, this increase is not uniform across all categories. Non-current liabilities decreased significantly from RMB 102,000 966 million to RMB 26 million, while total liabilities and non-current liabilities increased by 12% and 38%, respectively. Regarding interest expenses, the company experienced an increase in interest and related expenses for the 3 and 6 months ended June 2025, with amounts rising to RMB 3,541 million and RMB 6,927 million, respectively. This is a departure from the decrease observed in interest expense for the same periods in 2024. However, it's worth noting that there was a slight decrease in interest expense for both 3 and 6 months, ended June 2025 compared to 2024, with decreases of -3.7% and -7.7%, respectively. The performance of various segments and regions within the company has been a mixed bag over the past 2 years. The fintech and marketing business segment has been a standout performer, achieving significant revenue growth in both 2024 and 2025. This segment's success is evident in its impressive year-over-year growth rates, with a plus 16.4% increase in 2024 and a plus 17% increase in 2025. On the other hand, the VAS services segment has struggled, experiencing a decline in revenue in 2025. The segment's cost of revenues decreased by -8.3% in 2025, while its gross profit also took a hit with a -18% decrease. This underperformance is a cause for concern and may require attention from management to turn the segment around. The others segment has been a consistent performer, achieving revenue growth in both 2024 and 2025. With a plus 7.1% increase in 2024 and a plus 26% increase in 2025, this segment's success is a welcome trend for the company. Overall, while some segments have struggled, others have thrived, highlighting the need for targeted strategies to address underperformance and build on successes. Management is optimistic about the company's future prospects, expecting solid growth in the second half of 2025, driven by strategic investments. This growth will be fueled by expansion into new markets and digital transformation efforts. The company has a positive outlook, with net gains from investments increasing significantly. In addition to organic growth, management is actively pursuing external opportunities through disposals and acquisitions. Notably, the company is investing in emerging industries such as music and entertainment, outdoor equipment, games development, and internet-related businesses. This strategic focus on new markets and technologies positions the company for long-term success. Management's influence over certain associates through board representation or other arrangements also underscores its commitment to driving growth and returns. The proposed acquisition of an existing investee company through Tencent Music is another key initiative aimed at maximizing returns and expanding the company's reach. Overall, management strategy is centered on strategic investments, expansion into new markets, and active portfolio management to drive long-term value creation. There is no notable activity in terms of acquisitions or divestitures. The company has not made any significant purchases or sales of assets, businesses, or subsidiaries that would impact its overall operations and financials. This lack of activity suggests a stable and focused approach to business management, with the company choosing to maintain its current structure and resources. The company has a history of paying dividends to its shareholders. In the financial year 2024, it paid out RMB 37.5 billion as dividend income. This is evident from various sections of the report, including page 22, which explicitly states that the company paid dividends for the year. Additionally, pages 30 and 32 show cash dividends paid in previous years. The proposed final dividend for the year ended December 31, 2024, was HKD 4.5 per share, as mentioned on page 56. Furthermore, page 61 confirms that the company did pay dividends in both 2025 and 2024, with amounts of RMB 3281 and RMB 1746 respectively. The payment of dividends indicates a commitment to returning value to shareholders, which is a positive sign for investors. That concludes the financial summary for Tencent Holdings Limited. Feel free to comment below, and I will be happy to answer them when possible.